Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. That being said, in today's episode, I'm talking about Ethereum's secret weapon for scalability, Bitcoin's biggest upgrade in years, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all of those updates. Now, if you like crypto, please subscribe to the channel and hit the bell notification button, or follow the podcast on your platform of choice so you get a heads up whenever I post new episodes of Crypto Over Coffee every single Saturday. Now, just a friendly reminder, like we have to do every week, I wish I didn't have to, but I do. Please be aware of scammers that are in the comments posing as me and other crypto YouTubers. I don't have a WhatsApp. I will not contact you on WhatsApp or Telegram or Twitter or pretty much any platform. There are lots of people trying to scam you pretending to be me. So on YouTube specifically, if the comment doesn't have the name highlighted like you see here on the screen, it isn't me, and you can go ahead and report them. So please be safe out there. Now, in partnership with the folks at Keystone, I also give away a Keystone Tablet Steel Seed Phrase backup device in every episode by picking a random comment from the video. And just for transparency, the product is only available in select regions around the world. So if you win and you're from an unsupported region where they don't ship the product, I will send you some Bitcoin instead. Now, the winner of last week's giveaway for the Keystone is here on the screen. So big congratulations to you. And of course, I will be in touch. And also shout out to my favorite roaster, Red Rooster in Virginia, for sending me this awesome Colombian coffee. Now, I'm changing it up today a little bit, guys. I'm going to switch it up. Usually we start with the crypto market update, but I want to test out whether you prefer if I start with the headline story from the title or the crypto market update. So tell me what you like best. This is an experiment. That said, the headline of today's episode alluded to a secret weapon that Ethereum has under its belt that can alleviate the pain that is faced by every single user of the protocol today, and that is limited scalability. Now, when I say secret weapon, it's more of a pun than a literal statement, because that secret weapon is really zero knowledge proofs, or more specifically, a family of that technology, zkRollups. Now, the Ethereum creator Vitalik Buterin and many others in the space agree that zkRollups are a critical element to achieving the scale that Ethereum and other decentralized networks need to not only wipe out the egregious gas fees, but to service true mass adoption of blockchain technology. It's not a secret that Ethereum is today a rich person's game. It's a wealthy person's game, with transaction fees in the hundreds of US dollars quite often for very, very basic operations. And that indicates that a solution is not only much needed, but needed yesterday, actually. This brings us to the conversation of rollups, which is a method for scaling where multiple transactions are rolled up into a batch on a layer 2 network that sits atop Ethereum's mainnet. And then those transactions are validated and consummated on the Ethereum mainnet for finality. The prevalence of layer 2 solutions where transaction volume can be delegated to less throughput constrained networks has been quite popular in 2021, especially with optimistic rollup platforms like Arbitrum and Optimism providing options for DeFi applications to offer cheap and fast transactions for users, for example. However, optimistic rollups are not necessarily the ideal solution, and the reason for that is actually in the name. Optimistic rollups are a mechanism for bundling and processing layer 2 transactions where bundled transactions are assumed to be valid by default, hence the optimistic part. The protocol is optimistic that the transactions are valid. This requires a lengthy waiting period for finality on those transactions and subsequent fund withdrawals as they make their way to the Ethereum mainnet, during which those transaction bundles or transactions could be disputed if they were discovered to be or suspected to be malicious. Now, this delay in finality is a deal breaker in many scenarios and a UX disaster for many use cases. However, there is another type of rollup technology that is more promising as a bearer of massive scalability, and that is the aforementioned zkRollup. In fact, you might have seen one of the mainstay zkRollup projects, LoopRing, take a massive 7 or 8x price gain recently, and that's likely due to people waking up to this idea that this technology is needed now. In addition to LoopRing's success, another zkRollup contender, Matter Labs, and their product ZK Sync are also picking up steam with a recent 50 million Series B fundraise, which is pretty huge. And zkRollups, in contrast with optimistic rollups, do not assume that bundles of transactions are valid by default, and instead provide verifiable cryptographic proofs for the bundles of transactions that are adequate to evaluate the validity of the contained transactions on the Ethereum network. The zero knowledge part really refers to the idea that the Ethereum network does not need to know the contents of the transactions themselves insofar as they are accompanied by a proof that can be used to verify that the transactions are not malicious. That's what these protocols are built upon, being able to verify without full knowledge, right? In fact, Matter Labs' ZK Sync product is touted to have solved for another major challenge in adopting the far more complex zkRollups tech, and that's the ability to write smart contracts in native Solidity instead of a specialized language for the protocol. So if you imagine a world where Ethereum could scale several orders of magnitude better than it does today without sacrificing the core security or user experience that the mainnet network offers in general, short of gas fees, then you might want to imagine a world with zkRollups. It's very likely that this technology will play a huge part in the reality of the future of Ethereum. In combination with Ethereum 2.0's Great Merge, which will shift Ethereum as we know it to proof of stake, the advent of production-ready zkRollups will be the most significant component in Ethereum's repertoire going forward. Now, in the title, I also pointed to Bitcoin's biggest upgrade in years, so we've got some blue chip upgrades going on, and I was not being facetious in that title. The most significant update to the Bitcoin Core network in 4 years is set to activate in the wee hours of November 14th for those of us in the West, and that upgrade will bring the long-awaited no-brainer set of changes dubbed Taproot. Now, this Taproot upgrade contains 3 major Bitcoin improvement proposals, which are generally focused on the way that transactions are signed on the Bitcoin blockchain. Firstly, Bitcoin's current ECDSA signature scheme is being replaced by the more flexible, secure, and generally efficient Schnorr signatures. Secondly, it will introduce Merkleized abstract syntax tree or MAST structures to the network, how these transactions are structured on the network, which in a very oversimplified manner enables more complex spending conditions via Bitcoin scripts to be evaluated more efficiently with less data recorded on-chain. And then finally, the aforementioned Bitcoin scripts are a mechanism for embedding conditional logic into transactions by way of spending policies, as in who needs to sign for a transaction to be valid. And these are valuable for things like multi-sig schemes, for example. The tap script upgrade, that third piece here, is basically an augmentation to the functionality of Bitcoin script to take advantage of Schnorr signatures and all the batching that comes with Schnorr signatures, for example. Now, looking at these upgrades individually, you might be like, okay, boring. This is for professionals to use, and it's like really advanced features. And I get that. However, the magic comes from the sum of these parts. Using TapScript, MAST, and Schnorr signatures together generally allows for more complex transactions to be facilitated on the Bitcoin network with significantly less data recorded on-chain, which not only reduces the cost of transactions like this, but also makes them more private in the absence of excess public data related to those transactions. For many, this change won't be felt profoundly in the day-to-day use of the Bitcoin protocol, but for wallets and various Bitcoin services, this will be a fairly important change. And not only that, it proves that even if it takes a long time, Bitcoin is still malleable and it can still be built upon. And that's something I really hope continues. So great to see. Okay. Now that we've hit both of the headline stories in the episode, let's circle back to the crypto market update. And I have to say, I was a bit worried about this weekend being a red weekend, given the rejection of the VanEck Bitcoin Spot ETF. That name always gets me. I don't know if it's VanEck or VanEx, whatever. And basically, panic gripped the market for the better part of this past week for a variety of reasons. However, I am pleased to say that I was wrong. And that happens often, by the way, me being wrong, that is. No one can predict the markets. But anyways, Bitcoin made a nice recovery and held strong at around 65,000 at the time of recording. Ether as well was looking good this morning at around 4,700, and many altcoins had followed suit with recoveries of 4, 5, even 10% or more. And by the way, I've been really into CoinStats lately, the mobile app, because it gives me a quick view into the cryptocurrencies that I want to see prices for. I used to be the guy with like 100 CoinGecko tabs open, and it was just such a pain in the butt. So now I just mark coins I want to see as favorites on CoinStats, and I have prices and percent movement right at my fingertips. So that's been a game changer for me. Figured I'd shout it out. But back to the price action. I'm actually very impressed by this market movement in light of the FUD that's out there right now in full volume. It could bode well for new price discovery here before the end of the year. But what I will say is that December will be a very telling month. Will investors sell out of the markets for taxes? It's possible. Or will these investors hodl and buy at the end of the year? That's going to be really interesting to see, and that's going to determine where we go from here. So next on the docket today is a project that I came across that is implementing one of the use cases for NFTs that I talked about way back before NFTs were even really mainstream in the crypto community, and that is digital identity or self-sovereign identity. Yes, your identity attributes are non-fungible, my friends. You are non-fungible. But jokes aside, the project is called PhotoChromic, and after a cursory read of their white paper, I thought it necessary to share some thoughts here. PhotoChromic is building a biometrically rooted digital identity system that ties real-world identity attributes like your state ID, passport, social media, and more to an on-chain asset in the form of an NFT. And before we go too far, no sane person would ever drop copies of IDs or passports or marriage certificates on the blockchain, okay? We're talking about hashes here, not direct writing through the blockchain. Everything else is stored externally in storage you control. The idea is this. You use the PhotoChromic platform to take a liveness selfie, which maps your face, your liveness, to government-issued ID that you provide. From there, this data, along with any other attributes provided, are distilled into easily validated but otherwise non-identifying information on the blockchain in the form of an NFT and subsequent, basically, hashes. This means that you can selectively share the attributes that you wish to share and prove your identity, for example, without exposing other attributes. Potentially shifting the entire model for KYC, for example. You can prove your identity without having to rely on some third-party exchange, for example, to hold on to copies of your sensitive identity documents. Now, I know that this idea in general freaks a lot of people out, and I get that. But in my opinion, these types of things are the future. Giving people control of their identities in totality is really important. It's the only answer to the data breach problems and overarching issues around privacy that we have today. You and I don't have control of our identity. And PhotoChromic is one project with a cool proposed solution to solve this that I will be following very closely as they continue to build. Now, this past week, the privacy-focused web browser Brave announced that it would integrate Solana natively into its browser as an alternative to Ethereum and other chains. And a frenzy, of course, ensued. In light of Brave's mission to bring Web3 experiences and features to mass audiences via its browser, and to put its native BAT token into the forefront of the advertising ecosystem to reward users, it was clear that the high fees on Ethereum are a major blocker for the average user, a large swath of the user base. So by diversifying into Solana, Brave users will have access to high throughput and low fees for dApps and general payments straight from the browser. But I'll tell you one thing, Ethereum maxis are not happy. Ironically enough, Ethereum maximalists have long used Brave's rebuke of Bitcoin in the early days due to high fees and limited distribution to hype Ethereum. After all, Brave chose to make their native reward system denominated in an ERC20 token, basic attention token. Ethereum maximalists wanted Bitcoin maximalists to know it, too. They wanted them to feel it. But now many of these same people have turned on Brave, as if integrating heterogeneous blockchains is in some sort of violation of some non-existent exclusivity agreement. And I'm sorry to report to those folks, Ethereum is just not viable right now for most users, and that's just a fact. And the reason is eerily similar to why Brave opted to use Ethereum over Bitcoin in the early days in the first place. I have no doubt that Ethereum will solve its scalability problems. But in the meantime, there's nothing wrong with Brave expanding functionality to other chains. In fact, that's the way they should be going. Your web browser shouldn't be locking you into one protocol over another, to be honest. For me, I don't really get the whole point of being angry about this. I think everyone should use Brave browser. It's a fantastic web browser, and embrace the multi-chain future. That is the future. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please hit the like button. Get subscribed, hit the bell notification button if you can, or you can follow the podcast on your platform of choice. It tells those robots that you're enjoying what you're watching, what you're listening to, and others might also do the same. So thank you so much for doing that in advance. Now, if you've been following the news even remotely closely, or you've been watching the trillions of dollars being printed in America, you will probably have heard of our surreptitious friend, inflation. Inflation is a pretty interesting little beast because it very silently and very slowly, most of the time, robs you of your spending power over time by way of debasement and the laws of supply and demand. In fact, inflation is the very reason why a soda that once cost a nickel for your grandfather now costs $2 for you. Inflation is responsible for the fact that your grocery bill is $200 when only a matter of years ago it was only $150 for the same products. Of course, there are plenty of people who would seek to refute this inconvenient truth that is so indelibly ingrained in our minds to imply that the recorded 5% inflation numbers that were recently recorded are not that big a deal. And that drives me absolutely nuts. What the people who would like to defend the frivolous spending and money printing and monetary policy would like you to believe is that the increase in consumer goods prices for things like food, oil, clothing, even homes is mostly related to a phenomenon called demand pull, which is basically inflation of prices due to an increased demand for goods met with a constrained supply of goods. Rather, a shortage of supply causing prices to rise in the face of consumer demand. Now, this is undoubtedly at play here. Supply chains are still hamstrung to say the least, but to discount the fact that inflation itself at the highest levels year over year in 13 years is not a big deal is purely ridiculous. To make matters worse, there are a contingent of people who genuinely believe that printing more money is somehow the answer to our problems here. And I can't fathom what school of economics these individuals frequent, but I can assure you that it's not one that I'd recommend. Rising stock prices are also not some magic beanstalk that keeps increasing one's wealth, but rather another barometer for the relative loss of value that one's currency has in relation to these stocks. So just like I've said about gold prices over the years, it's more about 1 ounce of gold buying you more and more dollars than it is about gold appreciating in value. Gold holds its value pretty well against dollars that lose value through inflation. To put it in perspective in an even clearer way, what's at play here? $100 in 1980 is equivalent to the purchasing power of $335 today, as a result of an average 3% inflation rate year over year. Like I said before, the last reported percentage is 5%. Yes, that is your savings being drained of value every year. That's my savings being drained of value every year. Inflation is very real, and frankly, in a world where everything is sensationalized, for once, I agree with it. Inflation is not a magic force or affliction. It's not a myth. It's a powerful and nefarious drain on our economy that can only be stemmed by sound economic policy. So I say, from a place of genuine care for the future generations of people after us, anyone who does not take seriously the ever-accelerating clip of inflation must realize the 404 logic not found in their way of thinking. Alrighty, my friends, it's time for sponsor time. We only have one sponsor today, and that sponsor helps keep my coffee cup full and the show coming to you every weekend. And yes, I always forget to drink my coffee, so we're going to pause and I'm going to drink it now. So first, I want to thank the long-term sponsor here of Crypto Over Coffee, Ledn, who offers awesome Bitcoin and USDC savings account products, collateralized BTC loans, and more. Ledn actually recently increased their interest rate tiers for both Bitcoin and USDC with 6.25 APY for balances up to 1 Bitcoin and 2.25 for any balance over 1 Bitcoin. Additionally, the USDC savings rates increased to 9.5% on the full USDC balance one has in their account. And you're not going to get that at any bank, okay? And now, as part of an onboarding program for new users, you can get $10 in USDC if you make a qualifying deposit of $75 and leave it in Ledn for 15 days or more using my link in the description and pinned comment below. So if you want to start earning interest on your Bitcoin or USDC, definitely give Ledn a look. Check out the link in the description, and I thank you so much for that in advance. All right. So let's do some community Q&A. We always do this on the show. I love answering questions from folks who watch the show, who listen to the podcast, and I've got some questions from last week's episode that I'm going to answer. And I want to remind you that if you have a question that you want answered, leave them in the comments below on YouTube, or if you're listening somewhere else and you don't have the comment feature, you can tweet me at Hashoshi4 or DM me. I just opened my DMs for this very reason. So let's dive into these questions. All right. First question of the day is from Do the Derek. I've seen questions from Do the Derek before, so thank you for continuing to ask questions. Do you try to take part in all the ecosystems, or do you just stick to your favorites? I'm getting overwhelmed with all the new projects on layer 2s and other chains. So this is a good question, and my answer might not be representative of what I recommend for you. Because I have this channel, because I live and breathe the crypto space, and I have to have as much knowledge as I can to share with you, I do try and jump into every new ecosystem. I might risk funds on new bridges or new DeFi protocols so that I can try them out so that I have some knowledge about them, where I wouldn't necessarily recommend everyone do that. I think the best strategy for somebody that's in crypto that has a full-time job, that is doing this as a sort of a passion, an interest, a hobby, and an investing mechanism, my recommendation is you to find a niche, even find a protocol, and understand that ecosystem inside and out, and really get engaged in the community, have your finger on the pulse of everything that's going on there. I think that's the winning strategy for most people. So what I do is not necessarily what you should do. What I do is I try and learn about everything as best I possibly can so I can talk about it on the show, so that I can find cool things to cater to everyone's interests around the space. Of course, I have biases. I'm most interested in the Ethereum space, the Cardano space, the interoperability protocols, the Cosmos, Polkadots of the world, and I really like very small niches of the NFT space, and I'm learning more about the gaming space and all the little nuances of that. The reality is, though, that strategy is very tough to maintain, and I even struggle with it sometimes. So for you, I'd recommend find a layer 1 chain or two that you're really interested in, an industry that you're really interested in, just learn everything about it. Dive really deep, get really engaged, and I think you'll find that it works out really well for you. So hopefully that covers this question. If you have a follow-up, leave it in the comments. Thank you so much. Next question is from Razor Wire Laser Beams. Cool name. I know you're a big believer in interoperability, but do you think there's room for two solutions to the problem, specifically Polkadot and Cosmos, both, geez, I can't talk today, Polkadot and Cosmos, both existing in the medium to long term? Love your channel, great top site and everything. Thank you for the kind words, first of all, and sorry for bungling the pronunciation of your question. Anyways, here's the deal. I do believe in interoperability, and I do believe that realistically, there's not going to be one single interoperability protocol that rules all of them, that rules the roost, that rules everything. Maybe in the future, there will be a standardized communication protocol that wires together these different nucleuses of interconnected blockchains, right? So if you think about it this way, the true internet of blockchains would really be composed of what can provably and securely connect the Polkadot ecosystem that's interoperable in its own right, to the Cosmos ecosystem, which is interoperable in its own right, to the Icon ecosystem, which is interoperable in its own right. So you'd have these big sort of, it's almost like hub and spoke looking, where you have a big, deeply connected interoperability network like Cosmos that's connected deeply to the Polkadot ecosystem and to others, right? And so there will be this deep interconnectedness across interoperability protocols. I have a feeling that's what's going to happen, personally. And I think that that will do enough to fix the problem of fragmentation that we see so often in this space. Because right now, in order to play in many of these different ecosystems, I've got to have a bunch of bridges, I've got to have multiple wallets. If I'm lucky, it'll be EVM compatible and I can use MetaMask, but then I still got to switch networks. It's just, the whole thing is such a pain to deal with. So the future is really going to have to be interoperability across these different protocols, however that manifests itself. I can't say specifically exactly how this is going to work out, but I have a feeling you're going to see these connections made between the different big interoperability projects like you mentioned here. So I don't think it's one has to win and the other has to fail for it to really, uptake, because there are also limits, upper limits or upper bounds to how many blockchains can live in these different ecosystems as well. So there's that to think about. For optimal performance, and specialization comes into play. What protocol fits best for what type of applications? That's just my thought. There's a lot going through my head in this space, and I'm really following it closely. So thank you for asking a question about that. All right. Next question is Crypto0634. Is Cardano still a sleeping giant, or is it heading the way of EOS or EOS or whatever you want to pronounce it like? Okay, so I actually wanted to answer this question because I think there's always two contingents of people, right? There's people who support my channel, who know that I like Cardano, who know that I really like Cardano and I'm engaged in the community and I believe in it long term. And there are people who say, like, basically, you're a loser because Cardano sucks, right? So it's like either way, if I'm not 100% all in on every decision Cardano makes, the Cardano people are pissed, or if I love something Cardano's doing, then the people who hate Cardano are pissed. That's kind of what the reality is. Here's the thing. Cardano is one of those projects that is built in such a radically different way, and I would almost liken it to Polkadot in a way, because the vision and the structure and the complexity is just like level 100, right? It's huge. The scale of it, the idea, the complexity, and the challenges that are at hand to implement, wild, right? Wild. It's not really compatible, that approach, with the way that the crypto space works, which is instant gratification. Things have to work now. You have to hit deadlines. You have to keep announcing stuff so people stay interested. And so I understand where people come from, and that's turned into this weird community thing. To me, Cardano has the technical foundations and the capability and the general architectural value to deliver on the vision that it is laid out in the very beginning. There are things that still need to be done. The Plutus application backend is necessary, non-negotiable for the implementation of most dApps, if not all. Right? That needs to be launched. That's coming here shortly. There needs to be a fully functioning method for scalability so that when dApps come live and we realize that there will need to be some type of scalability in layers, Hydra needs to come, right? So there are things that still need to be built. Cardano's come a long way, but I don't think you can call it a sleeping giant. Now is the actual time to deliver and to actually see what the metal is behind Cardano. It's hard to compare it to EOS because EOS was heavily funded, as was Cardano, but the big difference is that EOS stuck to an architecture pattern and to an incentive model and to a lot of different decisions that were made in the very beginning that clearly didn't work and clearly weren't right. I mean, down to the delegated proof of stake model just was very it was naively implemented in EOS, and they knew that, or I think they knew that, and it didn't really change much, right? So Cardano has changed a lot over the years in reaction to the research and the testing and the things that they knew weren't going well or didn't go right. So my main point is that Cardano's research-based focus and the fact that it was rewritten multiple times, basically from scratch, to accommodate some of the things they found, like this design doesn't work, really goes to show that the comparison between EOS and Cardano breaks down at that layer, right? There's been a lot of shift to make sure that Cardano will work, at least the way that the research says it will. Will that translate into global mass adoption? No one can predict that. You can have a hunch, you can think, you can believe. I believe that Cardano is going to be successful, but I can never tell you that with 100% certainty, and no one can, right? So the reality is, do I think Cardano is a sleeping giant? No. Do I think Cardano still has a lot of untapped potential? Yes. Do I think now is the time they have to deliver on the smart contract ecosystem and getting DeFi primitives up and out there and in people's hands? Yes. Do I think scalability needs to come basically immediately after that? Yes. So I think it's about holding the Cardano project accountable for its promises, but also thinking about it in terms of the fact that we're still so early in the space, it's way too early to pick winners and losers. So long-winded answer, but I appreciate you asking that. Philosophically, I think it's good to just kind of clear the air on where things are at in that space, and I will continue to cover and support Cardano regardless of what people think. So thank you for your question. And with that being said, I think I've already been talking for about 10 minutes already, so I will not waste any more of your time on my philosophical musings on Cardano and design and all sorts of other things. I want to thank you so much for spending the time to watch this show, to watch this channel, to watch Crypto Over Coffee. If you're a repeat visitor, thank you. And if you have some time to stick around, I will leave a couple of videos here on the screen for you to watch, to continue watching or listening on the podcast platform. And I hope you and your family have a wonderful week ahead. Until next time, cheers.